And when they talk about a short squeeze, where the people who are short now have to come up with silver, and there is no silver, or there's not enough silver. Let's say an exchange has a technical default because they don't have the silver, so they pay you in cash. It's not that your contract expires worthless, but you can't get the metal for it. You have to accept the cash for it. And that will be seen as a default, and that'll spook everybody, because they will then realize that there's not enough silver to cover the claims against it. And if you're somebody like, if you're Raytheon, you're making missiles, and there's silver in those missiles, or if you are a solar panel maker and there's silver in the solar panels, you got to stock up in the face of that, right? So you have no choice. You can't just shut down your assembly line. You have to pay whatever it takes to get the silver to make sure you can handle this year's orders.
In today's news recap, precious metals decline, platinum falls 5%. The prices of precious metals turned to losses on Friday, with platinum falling by more than 5% as investors digested the news of United States President Donald Trump preparing to meet with his Russian counterpart Vladimir Putin in Budapest in the coming weeks, signaling potential progress towards a resolution to the conflict in Ukraine. Apparently, the carnage in precious metals happened because the U.S. president is also set to meet with his Chinese counterpart, Xi Jinping, in 2 weeks, with traders hoping that the two leaders will ease the trade tensions between the two countries. Traders also worried about a weaker automotive demand amid the growing popularity of electric vehicles. Gold declined by 2.15% to go for $4,234.51 per ounce, while silver dropped by 4% to $51.99 per ounce at the same time. Meanwhile, platinum slid by 5.01%, going for $1,519.14. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
What's happening right now is basically what we talked about in all those previous conversations when, the fiat currency experiment was obviously going to fail eventually. And when will that happen? And what does that do to gold and silver? And so basically what we're seeing now is the answer to a lot of those questions, because the world is starting to realize that the dollar and the euro and the yen and the yuan really aren't good stores of value anymore. They're not good reserve assets because the concept of a fiat currency gives the government via its monetary printing press basically a blank check or an unlimited credit card, however you want to think of it, and they misuse that privilege and eventually blow up their currencies, everywhere and always. That's the way it goes when a government takes over its own currency and starts manipulating money. And so we're living through one of those times right now. And one of the things that inevitably happens during, let's call this a currency death spiral, let's say, is that money pours into, or capital pours into real assets that governments can't inflate away. And gold and silver are the forms of money that qualify as real assets. So it's no surprise that huge amounts of capital are pouring into them right now. And it's sending their prices through the roof because they're not that big of markets. There's a lot of gold in the world. Very little of it is for sale at any given time. And there's just not a lot of silver in the world. So any kind of outside capital flowing into what is, a small, thinly traded market usually sends its price up dramatically. And we're seeing that now. There's a lot of talk about a silver squeeze where there is just literally not silver on a lot of exchanges for a lot of uses. And so people are kind of panic buying now. And that's what we're seeing. We're seeing gold go way up because people have lost faith in the fiat currencies, and we're seeing silver go up because we're running out of silver. And, in each case, you and I talked about it happening eventually, and now it's happening. And then the question becomes, how much further can it go? And, to give away the answer, I think it's as long as we're inflating away the world's fiat currencies, gold and silver are in a bull market. They'll have corrections along the way, but until the dollar and the euro and the yen stop falling in value because of increasing oversupply, then you want to be in precious metals. And so there really is no end to that bull market until the governments of the world get their act together in terms of monetary policy and do that reset that we've been talking about for such a long time. So a lot has to happen, in other words, before you want to sell your gold and silver or even stop stacking.
In today's news recap, HSBC expects gold's bull wave to hit $5,000 per ounce in 2026. HSBC on Friday forecasts that gold's bull rally would drive prices as high as $5,000 an ounce in 2026, supported by elevated risks and the impact of new entrants into the market. Spot gold breached the 4,300 level on Thursday and was headed for its strongest week since December 2008. The advance has been fueled by geopolitical tensions, robust central bank buying, rising exchange-traded fund inflows, expectations of U.S. rate cuts, and tariff-related economic uncertainties. The bull market is likely to continue to press prices higher for 1H26, and we could very well reach a high of $5,000 per ounce sometime in 1H 2026, HSBC said in a research note. And yes, you guys, this is up to date and correct. Despite expecting higher prices, their gold price forecasts are significantly lower than current prices, as HSBC also raised its 2025 average gold price forecast to $3,455 per ounce from $3,355 previously. It increased its 2026 average gold price forecast to $4,600, up from its previous estimate of $3,950. HSBC said that given the sharp rise in prices during the second half of 2025 and heightened risks from new market entrants, it expects gold prices to remain elevated and potentially spike further through early 2026. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
What we're seeing in the world right now is instead of governments getting their act together, the exact opposite. Deficits are going up rather than down. The amount of debt that's accumulating is increasing because of the deficits and because of the interest cost on the existing debt. But interest rates aren't going down. One thing that it would be good for gold and silver, but it would be a sign that we're at least stopping the accumulation of debt would be for interest rates to fall dramatically from here, because that would imply that governments are still in control of the financial markets because they want lower interest rates. But if they're not succeeding in getting them, that tells us that instead of becoming more and more under the control of wise governments, the financial markets are spinning further and further out of control. The bond market is just not listening to central banks now, or else we'd have a lot lower 10-year yields on all the big government bonds. And that's not the case. So, it would have been much better to buy your gold and silver 10 years ago, or to start buying it in, say 2015 or so, and then just continue to stack up until the current moment. And a lot of your customers, a lot of my subscribers have done that. And they're part of the new generation of rich people coming along who are going to have the capital to rebuild the world when these currencies collapse. But the majority of people are just now kind of waking up to the idea that gold and silver might be good investments, and so they're looking at it and going, well, like you said, it's at an all-time high. Just on principle, I don't buy things when they've hit an all-time high. But in this case, there's no reason for the current price to be the all-time high permanently, because governments are not slowing down the debasement of their currency. They're actually increasing that in most cases. So, until that changes, gold and silver have a wind at their back and probably an upward trajectory in price. Although, again, corrections happen in bull markets, and you could see silver go back down to $40 an ounce or $30 an ounce from here. But that would be a setup. That would be a buy the dip kind of scenario in our world, because it would then take off and go on to a new high. So yeah, the things that got us here are getting worse and not better. And we should keep an eye on those things and let that dictate how we invest our capital.
What do you think of John's take? Do you agree with him? Is the silver shortage a reality, or is all of this just bollocks? Post in the comments section down below your honest opinion and share with the stackers your gold price prediction for the fourth quarter of 2025. Now, watch this video right here because it's a perfect fit for you, and I'll see you on the other side.